Hello everyone, it's finally weekend. What a week. This is the wildest week on Wall Street since the 2008 financial crisis. In this week, the longest bull market finally ended and the oil price tanked. Stock market had two of the biggest one-day falls in US history and triggered the 7% circuit breaker twice in a single week, made a history. Most dramatically, the biggest one-day loss since 1987 was immediately followed by the biggest one-day gain since the financial crisis. And just one day after the S&P 500 futures hit their lower trading limit, they then hit the upper trading limit right in the following day. Two extremes meet each other. On Friday, the Dow Jones Index closed up nearly 9.4%. The S&P 500 also surged 9.3% to erase almost 90% of Thursday's losses. Last time we see the stock market move above 9% in one session, then another 9% in the next session, it was back to 1931. And the average up or down of more than 4% in 5 straight days is a first since 1929, the Great Depression. Three favorable policies behind this epic V-shaped rebound in the midst of a national emergency. First, things often develop in the opposite direction when they become extreme. Because of too much blood on the street, stocks begin the day higher on the hope of a higher fiscal stimulus from the US government and the others around the world. President Donald Trump declared a state of emergency on Friday, freeing up as much as $50 billion in funds to fight the outbreak. In addition, 1.4 million test kits will be available in the next week. The president also announced that the federal government would buy oil to fuel the strategic petroleum reserves. That definitely helped the oil price and energy sector to stabilize and rise. Second, House Speaker Nancy Pelosi said on Friday that Congress and the White House were close to a deal on economic relief for the coronavirus outbreak. That deal of $8.3 billion later passed the Congress with bipartisan support in Saturday morning. This emergency bill makes the coronavirus testing free to all Americans, provides $3 billion for research and development of vaccines, paid sick leave to those affected by this pandemic spreading across the country, and also provide targeted financial aid to certain geographic areas, small businesses, families who miss their paycheck, and certain industry sectors that are hard hit, like the airline or hotel industry. Third, also helping this market, the Federal Reserve said it will start buying treasuries across all durations, accelerating the purchase it announced just a day ago. This new round of bond purchases is on top of the repo market operations that would amount to $1.5 trillion. All of the three factors surely help the stock market a lot. You can start to smell the optimism in the air. Just a day before, the fear index of VIX is at its highest level since 2008 financial crisis. on Friday, it dropped significantly by 25%. International market also joined the rebound when world leaders pledged to do whatever it takes to protect the economy from this coronavirus fallout. At this point, I guess many people want to know whether the market has bottomed, or even regret it for missing this bottom. It is just human nature. When markets are spiraling down, everybody rushes out to the door for an exit. And then they think they missed out the bottom, so try to rush back in. Unfortunately, there's no easy answer for this question because it really depends on how this pandemic in the upcoming months will shake out and how investors and the public will react to this pandemic as we learn more. Just to counter the 3 positive factors that boost the market on Friday, there are also 3 risk factors to consider about. First, even with the huge rally on Friday, global equities still posted their worst week since 2008 as investors priced in severely weaker economic outlook. Second, the problem is, while uncertainty certainly helps with market confidence, none of these monetary or fiscal policies can directly create a recovery. To do that, we really have to get past this pandemic of fear, which could spread even faster than this virus. Coronavirus could have a very real impact on the economy. For instance, Delta Airlines said it will now reduce its flight capacity by 40%. A very dramatic increase from its original expectation of a 15% of reduction. And third, it is important to remember that we tend to see this type of very big swings both on the downside and on the upper side in the midst of a bear market. It takes a lot of skills, luck, and discipline to take advantage of these opportunities. You will need a very strong mindset and also a very strong heart for it. For instance, Dow Jones' largest decline ever came on October 19, 1987, the Black Monday. Many people rushed in to buy the dip. But just a week after that, it had another significant drop of 8% on October 26. And that was a real test for everyone who had bought the dip right after the crash. And as there's still too much unknown about this virus and its economic impact, stocks are very likely to stay on this roller coaster for a little while. That's all for today. Thanks for listening. Stay safe and healthy. I'll see you next time.